Hey guys, this is Simon with Trade and Perform Coaching doing the trade review for ES and NQ for August 8th, 2017. It was an interesting day. First of all, we had the market gap down slightly. We had what looked like a trend day up to begin the day with, and then a complete collapse of the rally at the end of the day and a give back. So the question is this: how do you make money when the market's really slow? How do you stay true to your process and understand what's going on, and what are the signs you can look for when we're at all-time highs when the market's about to reverse? And I think that's what I'm really going to focus on here. And before I get started, so a couple things before I get started. First, let's get this out of the way. Basically what this says is, and you can pause to read this if you'd like, but past performance is not indicative of future results. This is for educational purposes only. Please consult your registered financial advisor and your risk trading plan before investing or trading any financial instrument. You can read the rest for yourself. There you go. And then let's get on to the key. So how would we know, right? How would we know what the market would look like? And so that's important because so I want to show you what the charts look like before we get there to the day, since I recorded it, but the file was so large I didn't stop recording it to the end of the day that it's still processing on Vimeo. So if you look from last night, let's see if we have ES for Tuesday. So this is what the zones look like, right? And what you'll see is, so the first thing that I'm trying to do is, first of all, following in the theory that anyone can learn how to trade, right? But what do you need to learn how to day trade accurately? First, you need to know where your potential trade location is, right? What's the odds that trade location is going to hold or fail, right? And then decide based on those odds whether you want to take a location or not. So green is the weakest location, right? It's green, it's not developed, but it is a support resistance area. White is the highest odds location, and then yellow is the second highest odds. And my focus is on taking, for my own trading, again, this is my trade plan that I'm sharing with my team members and hopes of educating them, right, and teaching them how to trade. They take what I do, my trade plan, and they make it their own based on their own risk profile. So my profile is I'm an aggressive trader. I trade size, and I want to have very high odds. Kind of like if you had a business, I want to focus on where I can get 85% of my profits and leave everything else alone, right? So there was a movie out recently, I just saw it on Netflix, and they were talking about McDonald's, and they were talking about how the original founders of McDonald's said, hey, we figured out that we make 85% of our profits from burgers, fries, and Coke. So we just took everything else off the menu and focused on burgers, fries, and Coke. And shockingly, that worked perfectly, right? Excuse me. So with that theory being said, the green area is the weakest location. So this is what the chart looked like, right? And then this is what the market did during the day. So why is that important? Because if you look, we opened up, we pressed down into Monday's low in the open gap. Now, you would say, well, that's an open gap or the prior day's low. That makes perfect sense to trade there. Let me tell you a little secret. That is where retail traders are trading. And it doesn't mean that it can't work. It does work often. The question is, to what percentage do they work? Do they work at a high percentage or a low percentage, right? And my answer to that would be that I would argue that they work about 50 to 60% of the time, and that's a problem, right? Because if it's only 50 to 60% of the time and you're a day trader and you're leveraged and you're not disciplined about your stops, right? Obviously what you're going to say is, if you read most trading books, well, 60% win rate gets me profitable. But the reality is it doesn't, right? After commissions and expenses and slippage, the 60% win rate does not get most day traders over to profitability. So I do not trade the green zones, and this is the reason why. You'll notice that the first time through, granted, it held it in place for almost 30 minutes, but it finally works its way through and pushes up. And then if you look on the backside, right? Now on the backside test, this pushes down into the green zone right here and then rotates back up. It worked there. But then on the second test, it pushed through, right? I would simply rather not trade that green zone at all. That's for me. Now, that's number one. So what would have I traded if I had been here? Well, let me show you exactly what I would have traded. In this case, NQ. Notice that we open up on NQ. We push right up into the yellow zone, right? So the blue line's the opening print, push right up in the yellow zone, and reject. Now, you would say, well, hey, you missed this entire move from 59.15 to 59.70, and to which I'll say that's great. No problem. Again, I want to shift the focus of what I'm doing, and this always seems so challenging for a lot of people to get when the market's just going straight up. My interest is not, I want to repeat this, my interest is not in capturing every trade or even capturing the biggest move. My interest is in capturing the highest percentage move. So on the yellow zone, first touch into the yellow zone, right, is my objective to where I am attempting to trade, right? So first press in, rejects, and I get, I believe almost, let's see where that pushed down to, low of 59.12. So from 59.23 to 59.12 is 11 points. Pretty good trade. It's $220 a contract, right? If you captured your 11 points, obviously no one captures it perfectly, but if you targeted 10 points as we normally do, you were able to knock out $100 and $200 per contract on your scales, right? Second time in, again, it's a yellow zone. It's not a white zone. Focus for traders. So remember, this is to bring traders to where they can trade. You've just captured $100 to $200 a contract. Now the market is up above and pushing, right? So there's no indication, and there's no, the next resistance zone, and I want to show you this, it's here, and it never reaches here. This would have been a short location for me. It just simply never reached it. No big deal. Market rolls back over. Now, this is important. It's late in the day. Actually, this is so late in the day that usually what you'll see me say to the members in the room, and I'll say it repeatedly on StockTwits and Twitter, there's no need to initiate a position at the end of the day. What's the reason for that? The market has a very easy time making extreme moves at the end of the day. I hate getting stopped out at the end of the day, and unless I'm just extremely certain, I don't take that trade. Let me tell you what the other problem was with this trade here, was if you did take it, that was clearly a break, right? That was clearly looking like a trend day up, and on a trend day up, you do not want to see the market get behind the 62 retrace. So even, but once you were in this zone, right, understand this zone is 59, 29, 53, right? And even if you were waiting to take the top of this zone at 59, 23, 50, when it closed right here, so I want to be clear, I don't promote taking a trade in the last hour in general, but even once you took it, I discuss a lot, and I've put out a number of videos on what's a perfect 50-60 retrace, right? You don't want to see the market close behind the 62 retrace on a 5-minute bar. We close behind the 62 retrace, right? And that was your signal even if you took the 52, 59, 29, 50 to come out of the trade. On ES, right? If you look, exact same formula. It looked like if you were at this point of the day, right, of course everyone at the end of the day can go, well, Simon, now of course, but if you look here, this looks like trend day up, right? So now look, if you come in here, what were the signs that there was a problem, particularly at the end of the day? First of all, the green zone gets passed through on both sides. Secondly, the 50-60 retrace. I want to point out two things that are really important here, right? If you were sitting right at the 50 retrace on this, right at the 50 retrace right here, you achieved your 2-point scale from here. We generally are targeting 2 points of profit, then move stop to break even. You got your, if you had a trailer, you got stopped out. From the 62 retrace, you achieved your 2 points profit, move stop to break even, you got stopped out, right? So I want to be really clear on the 50-60 retrace, and that's important. Why? Because in the middle of the day, I send a note out to members. I want to bring that up really quick, and I write, and I said break of IB high has taken place, making the 50-60 back a high odds trade. Again, summertime, if you've already been paid, the point was I would bank it and enjoy the rest of the day, which many of the people already, by this point of the day, had already been paid, right? So if you look, right, again, it's getting paid as a day trader is all about knowing where the high odds locations are and managing that risk. So again, I want to point that out. 50 retrace, bank 2 points. 62 retrace, bank 2 points. Market closes behind the 62 retrace, technically right here, but you see the little arrow I put here, closes behind. There's no reason to take a loss any further than this point if for some reason you didn't bank your 2 points, which I don't know why you wouldn't. And then even if you thought it was going back to a high, and then importantly, we shouldn't have gotten behind the 50 retrace if this is true trend day up. It just doesn't happen, and it was the sign that there was a big problem here. Again, the green zone was not a support area, and then if you look, we pushed almost to 24.67 1/4. So this is funny. You'll note that I noticed that this is single prints in a weak zone. It needs help, but it was 10 points down, and as I record this, Our Globex low is 24.66 1/4. Again, I'm not looking to trade here. And so some people ask me, well, why do you put a green zone there at all, Simon? Why put a green zone there at all? I put a green zone there because when you're trading, you want to look at it and go, well, A, how do I figure out if I expect a big rotation up or don't get a big rotation up? And a great way to demonstrate that would be on today's CL, right? So you'll see on CL where we had a white zone that was tagged, right? And you can see the market, here I want to stretch this out so everyone can see this really clearly. Market appears to be, over here to the end, there we go. Market appears to be getting pummeled, flying straight down, first push into this white zone, right? Notice it never trades behind the white zone. Your stop would generally be about 10 ticks. My stop would be about 10 ticks behind that white zone following process, right? And look at the extension up. This is from 49 all the way back to 49.60, approximately 60 points, right? Giving you a great risk reward. But not only that, but it gave you a precise location to figure out what are you trying to achieve. You're trying to keep your commissions and transaction costs low, pick your high odds locations to trade, get a good idea of when you can press your trade, when you can't press your trade, and exactly what you're looking for. So when it's, quote, perfect, meaning there's no trade that's perfect, but there are perfect setups and you have to be able to identify them as a trader. Anyone can learn to trade, but they have to know where their high odds are or else they're guessing. They're all over the place and you can't get the consistency. And the key to making money is pulling the consistency out. So finally, I want to answer the question we started off with. How would have I known that the market was going to roll over? How would have I known to take profits and or get out? So there's a couple of clues. First of all, we rotate from 24.72, 24.82 to 24.87, a 15-point rotation. That's a big rotation. Look at the other rotations through the course of the day. 72 to 78. 78, let's call this to 69, right? This is a 50% expansion in range from at least the prior 3 to 5 days, right? It's hard for the market to maintain the energy. What was the next clue? Look as we achieve these new highs right through here, right? Look at the tick divergence as the market is pushing up. So then what's the last clue? So remember, all this is already given to the members ahead of time. Our team already has it. We know 10 up, tick divergence, key location for a short, right? So again, it's a more advanced entry technique, but it certainly was a place to know where to scale your trade and then look for the market to roll over. Green zone, I'm not going to take a stand at a green zone, and then the market washes all the way down. So potentially take profits. More advanced traders, more aggressive traders who know their trade plan, great location to set up a short, right? And then finally, no need, your 50, 60 both work for 2 points here, but no need to take a stand. And then from your green zone, right, there's no need to try to force a green zone. We know that it gets traded, they generally get traded through relatively easily, but did provide areas of pause in the market, right? So that's where we get that confusion between, well, it paused, but it didn't roll over. That's what we generally get at the green zone. Pause, but then push through. We know not to make a big attempt at gaining profits there, and it eliminates the frustration of I waited 30 minutes and then it got busted. And then finally, end of the day, we push down, just missing this 24.67 1/4 location, and we finally tagged that in European session. Again, it's a green area. I wouldn't be trading there, but as I wrote down there, good downside target for shorts, and that's exactly what it served its purpose. So again, my name is Simon. I'm with Trade and Perform Coaching, and my purpose is, my team's purpose, me and Arun, the purpose is to bring you a advanced strategic trade locations where you can make good, clean decisions, minimize the number of trades you have, consistently have a high win rate, right? And then that lets you focus on relaxing. And once you relax and you're gaining consistent profits, it allows you to, which obviously, and I want to be clear, I'm not saying all the zones work. I want to be absolutely clear. Like any real trader, we take losses, right? But they're minimized and they're small and they're controlled. And we minimize the risk. Well, actually, we try to eliminate the risk of ruin, right? Through following our process, right? But by having consistently high odds, anyone who's watched a video see consistently great locations from which to take a trade, well, that converts into a high win rate. And then if you can keep well, how do I say this? I have a friend who calls them something that I'm not going to use on the video, but let's just call them impulse trades, or why did I do that trades. If you can keep those out of your trade plan and you can keep your fingers away and you get used to making money, all of a sudden your outlook on the market becomes very different, and all of a sudden everything that you ever wanted out of the market becomes possible. So I believe anyone can learn to trade. You've got to have a process. You got to have high odds locations where you know you're going to be able to pull money out of the market at a high consistent rate, right? And you've got to be able to control your impulses to trade just randomly. But if you can do all that, you can accomplish your goals in the market. So anyways, my name is Simon. Anyone's welcome to join us. Email me at tradeandperform@gmail.com. I'm happy to extend a 5-day pass. It's $95 a month for charts in ES, NQ, CL, ZB, and the Euro. And I think it's the best value that's out there, plus the trade room all day where you get live commentary. So at any rate, I hope everyone's making a lot of money. Kill it. Number 1 rule, don't blow up. Number 2 rule, do not severely draw down. If you're losing money, stop trading, get reorganized, make sure you have an edge, then come back at it. Anyways, I hope everyone's doing well. Have a great night, guys.